Hello, you're welcome this morning to today's video. This is one of the videos amidst my Master Forex video series on YouTube, and I want to thank you for coming, subscribing to my channel. I want to thank you for listening to my past videos. I also thank you for the encouragement, and for all my students who just graduated recently in the Forex Master Class. I want to congratulate every one of you, and I wish you all the best. I know you're still with me for the next 1 month as I take you through mentorship, and as you go about your trading in the demo, and after that trading the real currency, and after that you also be with me in our forum, community of Forex traders, where we share signals. By the grace of God, in this video I want to discuss a few questions that have been asked on my Forex Facebook page. In case you don't know, my Facebook page is Forex Training. That is at Forex Training by Henry. Find it on Facebook page and then ensure to be part of us. My Facebook Forex advert takes place there, and it advertises the Forex Master Training, the Forex Master Class Training, which takes place within 3 weeks. And in that 3 weeks, we learn a lot about Forex. First week introduction, second week the nitty-gritty of trading, and then the third week is practical, and then you set up your own unique plan, and then I give you my gold standard plan that I use myself, and then you join us in the forum where we share and analyze signals, and we daily trade signals. So those are the benefits, and I'm a representative in Nigeria of Super Forex broker in Nigeria. You will find my link in the cover page of my video. You can always open an account with us and get a 40% bonus the moment you make your first deposit. That I can guarantee you. Just follow my link and put my affiliate link there, and I will ensure that is given to you. Once again, you're welcome. This hour I want to talk about a very important question that students have asked me in the past. They keep asking the question, which of this type of trading is appropriate? Swing trading or day trading? I'm sure you must have thought about that before also. Yes, it's an important question. Swing trading is good, but the thing you must know that is this: you must know that swing trading comes with advantages and also comes with disadvantages. I'll start with the swing trading. I do a lot with swing trading. I prefer swing trading. I love swing trading. As an example, I cannot tell you yes or no. I'll tell you advantage and disadvantage. I'm a medical personnel by profession, and you do not expect me to be trading the Forex when I have to see my patient, or when I have to, take care of analysis in the laboratory. No, I can't do that. It's impossible, because ethically it is not right. And number two, I need to give my job a full focus, and by the time I'm done with my job, I can return back to my Forex business. However, it doesn't mean I cannot monitor the market. But remember, I cannot place trade, because for me to place trade, I would have taken about 15 minutes to analyze the market very well without distraction, and that I do not see possible at the place of work. And so let's take note about that. And again, if you engage in swing trading, for me, you have less of palpation, less of worry. You are just calm, you are just relaxed. Yes, you don't get yourself troubled too much with what do I do and all that. You're relaxed, because it takes the burden and stress of what could be the outcome out of you, over a time. And for swing trade, you don't look out for the outcome in 1 hour, 2 hours. You are talking from a day above. You place a trade right now, and when you intend to get a profit on a good scale, it's from 2 days, 3 days above. So you trade currencies, buy and sell beyond a day. Yes, beyond a day. And in swing trade, You don't need too much money. With $200, $100, you can do good swing trade. With a 0.01 lot, you can trade for a long time and make more profit of over 100 pips, 200 pips as the week goes by. Sometimes I do a 2 weeks, 2 weeks trade. Another that I play, sometimes I'll check the results in 1 week time, 4 days. Sometimes I forget. But the good thing is that I've already placed a stop loss and take profit. And by the time I open it, wow, oh, $30, $40, beautiful. How many pips? Wow, 266 pips. Wonderful. So those are the advantages with it, swing trade. You don't need too much money. You understand? All you need to know is you must have a good skill of analyzing the market. Very, very important. You must have good skill in analyzing the market. So if you know how to do that, then you don't have problem. Yes, if you know how to do that, you don't have problem. Yes, that's the truth. If you know how to do that, you don't have problem. Okay, that is that. Now for the day trade. For day trade, if you have compromise in your health, first of all, do not go into day trade. Hypertension, fatigue, you are somebody that is so emotional, don't go into day trade. I do not advise you to do day trading. And day trading, basically, it's, you need a lot of money to do day trading. Yes, you need a lot of money to do day trading. Yes, because you should be somebody that can control your emotions, and then you should be able to have a good mental and sound mind to cope with losses, and then allow room for take profits, if you want to go into day trading. Because day trading occurs when you buy and then when you sell a particular currency in one day. Yes, and while it occurs in the forex market, it's often seen in the forex and while you engage in the trading in the forex market, you often see that there are spikes, sudden spikes in the opposite direction, different from the order that you have placed. You must be somebody who can manage those shocks and be able to allow reverse to take place, or allow the plan that you have put in place to finally manifest. Either you have put your stop loss and you take profit, you allow the market express itself. It could almost want to touch the stop loss and reverse back and then go to hit the take profit. You must be disciplined and be ready to manage it. So that is that. If you know you have a job and you are busy at work, I don't think it's proper for you to do day trading. No, you should stick to your the long hour trading. Yes, stick to the long hour trading. That is far better, far better. So that is that. Please don't forget, I keep advising and admonishing everyone to ensure that as much as possible they stick to the plan. And when you stick to the plan, you definitely come up with a good results. I want to focus this video on 3 things. Number 1, having discussed the difference between day trading and long-term trading, which is known as your swing trading. The second one I want to talk about is, in day trading there are rules. You don't just begin to day trade. No, there are some things you should know if you want to do day trading. For swing trading, it's very easy. Just have a good skill of how to analyze the market. If it's an indicator you want to use, an indicator that can span through day, week and month, and then you have a specific amount of money above $100 or $100, For $100, if you want to do swing trading, you stick to 0.05 lots, or between 0.01 to 0.05. You must not exceed 0.05 if you want to go into swing trading with $100 investment. And then secondly, you should understand the fact that once you are interested in putting the order, do your due diligence to see the trend of the market. Never go against the trend. Never go against the trend. Stick with the trend, and then the results will be fantastic. Stick to the trend. The result will certainly be fantastic. That I can guarantee you. Do not forget. And so if you also want to do the swing trading, you should understand the fact that you cannot open so many trades at a time. Just 2 is okay. And if you must open 2, then you are doing it at 0.025 and 0.025. You cannot do it at 0.05 and another 0.05. That is, you open two orders, different currencies or same currencies at the same time. No, that's not advisable. But for day trade, you can open as many as 4, 5, because you intend to close all the deals that same day and take your profit that same day. Quickly, let's go into trading basics that you should know if you want to do day trading. It is very important that you have this in mind. Number 1, if you want to get involved in day trading markets, I think you consider the following points that I'm about to tell you. Number 1, keep a journal of trading rules. Keep a journal of trading rules. Before you even get involved in the market, it's imperative to develop your own list of rules that you want to abide by. Yes, you have to develop your own rules that you want to abide by. And also, these rules should include how you will enter and get out of a trade. Yes, you have to set it. How do you want to enter? How do you want to get out of the trade? And then you make sure that you abide by them. What amount of risk you want to take on a particular trade? Now, the biggest obstacle for persons that are new in forex trading, inexperienced, or just trying to take their luck without proper training, one of the obstacles that they face is the lack of discipline. After all, they are excited about it, and then the prospect of making money. However, the rules, it's thrown away when they get excited, and keep the emotions out of check, and that way you are unable to fortify yourself or to resolve to stick to your plans. So you are advised to make your rules clear, keep your emotions under check, and then resolve to stick to them. Number 2, be mindful of your emotions and your ego. It's okay to leave a position when the fundamentals are clearly showing that you've made a mistake in getting involved in it. And it's not uncommon to make mistakes. Even we experienced traders will make mistakes. But the best thing you can do is to think practically. Yes, the best thing you can do is think practically. When you think practically, 2 things come to mind. You will know that it's not uncommon for traders to throw caution to the wind when dealing with a long streak. And also, however, this often leads them to lose even more money. And if they are experiencing a good streak, they may take even bigger risks that are not supported by any statistics. Avoid emotions and ego, and stick to discipline and rational thinking if you are going to be successful. You won't be able to make impulse decisions if you stick to the plan, and you will stick to the trading strategies and rules that ensure you can be successful. So all I'm trying to say here is that be mindful of your emotions and be mindful of your egos. Don't let your emotions take a hold of you. Don't let ego take a hold of you. Yes, it's very important. Don't let them take a hold of you. Just as much as possible, try and keep them under check. Number 3, always apply a stop loss. No matter what happens in the market, apply a stop loss. Apply a stop loss. It's very important. Once you decide this amount, keep with it, and this keeps you from getting too greedy when the market spikes. And you know, when it mitigates, it helps you to mitigate the loss that could happen. Make sure you put a stop loss, and when you do that, if you're already trading in the market and you have attained your target, create new stop loss and profit levels. You have attained your take profit. What you need to do is create a new stop loss and then increase your take profit. Those are the best things to do when you are trading. Apply a stop loss. And also, number 4, have a minimum daily loss set. Yes, this will be the amount of money that you can financially and mentally withstand when you lose them in trading the day. And this time you need to exit the position when trading the rest of the day. That's, for example, you are trading and you find that you made a loss, and then you made another loss, and then you made another loss again. Stop loss 3 times. You are advised to stop trading at that point and then take a leave, so that you go and relax. You may even decide not to trade that day again. You understand? It's not compulsory that you must want to make a trade profit at that, you know, compulsorily that day. No. If you first one stop, you hit stop loss, second one stop loss, third one stop loss, all you need to do is just return back and relax. Just quickly return back, you know, and relax, and close the market. Don't bother yourself about what's happening anymore. Just close the market for that day. And number 5, have a risk reward ratio. What I tell persons is that, for example, a 3-1 risk reward is ideal for people who are just beginning. And what does that mean? It means that for every 3 losses you have, you will have a good win. So you've told yourself, today I'm going to place 4 trades, and each of them I'm not going to touch it. It's either it gets to stop loss or take profit. That's the rule. I'm not going to stop it. I have said, okay, this is how much I can take to look for losses. This is how much I want for take profit. You are not going to stop any of them. Let them hit the stop loss. Remember, your stop loss is at 1 ratio, then your take profit is at 3 ratio. So if you have two stop losses, your 2 take profit is far bigger than your 2 stop losses, because that is 3 times 3, 9 ratio, or 3 plus 3, 6, compared to 1 plus 1, 2. So 6 against 2, that's 2 ratio 6. 2 ratio for loss, 6 ratio for take profit. So you still make more money, more successful trade, lesser loss. So have a risk reward ratio in your plan. Secondly, have a simple strategy. You can see my strategy here. I use the moving average, as you can see, for this particular currency pair, and then I confirm it with my indicator here and also the MACD. So it's very simple. It's something that you can do anytime. Always ensure that you have a simple strategy in which you trade. Don't make your strategy too complex. Having more than 4, I don't know. For me, 2 indicator is all right. 2 indicator is all right. That's for me. Make sure you have enough screen like this to be able to analyze the trade. 2 indicator is okay. Anything more than 2 indicator, I do not advise that. It makes it complex. Yes, it makes it complex. Number 7, you don't have to trade every day. I advise people to trade, my students to trade on Tuesday, Wednesday, and Fridays. Yes, and it's not round the clock. Your target is 25 pips at 0.05, you know, with the investment of $100 US. If you follow this in a month, you get $100 US profit. Yes, if you follow your rules, your strategy that you are using, and you are not emotional about it, you make money. Yes, so you don't need to trade every day. For example, on the Tuesdays, for example, the Tuesday, the Wednesdays, and the Friday, you can begin to trade from 1 o'clock. The beehive of activity begins from that one and ends at about 6. Yes, so you can engage that. And for Mondays and Thursdays, you could trade in the night. You know, you could trade in the night from 9 o'clock. The Asian trade, the Asian market is opened, and you can take advantage of it. Number 8, spread the risk. Spread the risk. There's an old saying that you don't put all your eggs in one basket. You don't want to put a lot of capital into one foreign currency pair. Set the trading amount to no more than 10% of your budget. If you have $100 as investment, make sure that your how will I put it, your risk level is no more than 10%. Like I said, do not exceed 0.05. That's 5%, 0.01 to 0.05. Use any of these. It's a good money management style, and that will help you. And also remember to make sure to invest only what you can comfortably lose. How the risk is spread needs to be determined by 3 factors, and they include: number 1, how much risk you want to take, what is your short-term goal, and what is your long-term goal. My short-term goal is 25 pips, my long-term goal is 50 pips. So when it gets to 25 pips, what you do is you move up your stop loss, and then you take your take profit high, and then you secure your 25 pips for the day, and then whatever comes on top is an advantage for you. And like I said, in day trading, you can open up to 5 trade at a time, but make sure that your total lot is spread between 0.01 to 0.06 at maximum. Now find a niche and stick to it. When I mean niche, I'm talking about options in the market. For example, currency pairs that you want to trade. Choose 1 or 2 currency pairs and try and read about those currency pairs. Understand those currency pairs by comparing them weekly, comparing them daily, comparing them on a daily basis, on a 4-hour basis. Know what's the movement last week and the same time this week. What is common about them? Study those currency pairs. Have a niche. And secondly, your indicators. Study your indicators very well. Know what indicators you use, and be careful how you follow those signals. When to follow the signals and when not to follow the signals. Make sure you have your niche. I mean the currency pair you want to trade. Know it very well. What indicators you use, your trading strategy and plan, know them very well. Number 10 is liquidity and volatility. The 2 qualities that you want in any forex market currency pairs: volatility and liquidity. And what are they? Stock liquidity or forex liquidity lets you buy or sell stock at a decent price, while volatility gauges the price variance for the day. Now when a stock is considered volatile, it could be a trader's dream come true, or sometimes the worst nightmare. An example is the euro US dollar. The volatility is very high, very, very, very high. So you have to be careful when you are trading it. Always ensure that you put your stop loss, and it's a trade that means you can make a lot of money quickly. Yes, you can make a lot of money quickly. So you have to be very careful when you are trading the euro US dollar, because one moment it will spike up, one moment it will spike down, and if you are emotionally disturbed, you won't, in fact you'll be surprised how you will just be quitting the market and stopping a lot of trades. So you have to be very, very careful. Number 11, don't purchase more of a losing streak. If you're already trading and then you are losing on a particular trade, and then you assume that because it has gone upwards as against the downward, as against your order to sell, and so you wish that it's going to reverse, then you place another sell at that new bullish price. It's not proper, because emotionally you end up losing a lot in the market when you keep going up and on like that. And on one trade that is already on a losing streak, and believing that it will reverse and then return back to the order bullishly or bearishly into the desired order that you have placed. You just have to be careful. Don't begin to make placing more order on a losing streak. Number 12, avoid putting focus on your amount, balance, leverage, and so on in the account. Don't bother about that. What you should be bothered about is minimizing or eliminating your losses, and then concentrating on making more gains. When you make more gains, it will take care of the losses, and then you are back to business. Yes, when you make more gain, you are back to business. You don't have to worry about anything. And also, do not act impulsively. How do I mean? If you are going to be a successful trader, you need to be disciplined. And if you stay in one position too long, or you need to be disciplined to stay in a position, and to know when you are staying too long or getting out too early. You have to be very careful about that. An instance is that you placed a trade and then you begin to get worried that it has not hit take profit for too long, and then you begin to cancel the trades, and then by the time you cancel it, you see that it is now moving again. Oh, the price is changing, it's increasing. Oh, you quickly put in the trade again. No, you don't do that. You don't do that. What you do is you place your trade and be determined to allow the trade get to its take profit, or eventually it gets to stop loss. But when you have 4 trades target per day and you have 1 stop loss and then you have the other take profit, it's better. But remember, if you are following indicator, analyze indicator very well. And if you are trading the naked trading, the natural trading, using the forex, the structures, the Fibonacci, or you're using your resistance and your support levels, ensure you do a proper forex analysis. And remember, you only, no matter your analysis, do not go against the trend. And if you feel your indicator says you should make an order against the trend, do not go beyond the 15 minutes and at most the 30 minutes time frame when you are obeying the indicator against the usual trend, against the main trend. It is very, 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 very important. Like I say, in forex analysis, forex analysis is very critical, and you need it. You need it seriously to be able to be successful in forex trading. And that is a key part which I used to buttress in my Forex Master Class training for my students. And I take time out on a one-on-one on the final day of the graduation when they will be issuing the certificate. I take time out to train them, finally on a one-on-one, right opposite each other, on how to analyze the market. The 4 golden rules you put into the raw in analysis, and you always come out with a proven good result, better than any indicator you can imagine. Number 14, conduct a daily review. There are 4 key questions. Yes, 4 key questions that you have to take time out to check. The questions that you have to ask yourself include: 1, did you abide by the rule? You set the rule yourself. What moving averages do you want to use? What indicators do you want to use as a confirmation to entering the market or exiting the market? What stop loss do you want to put? What ratio, 3:1 or 1:2, 3 for take profit, 1 for stop loss? What indicator, how does the indicator confirm and all that? You need to have your own plan. Haven't studied the market. Did you abide by the rules? And where were your weaknesses? Where did you observe your weaknesses? Were there anyone? And will you improve on those weaknesses? And if you intend to improve, was the trading strategy you came up with, is it working? And how do you intend to improve it if it's not working? So that is that. Ensure you write them down and conduct a daily review. Some people do weekly review, but it's better you learn to do bi-weekly review. That way you don't wait too long and you've been suffering same thing without noticing it, and you're getting losses. Number 15, practice various situations. Now listen to this. Practice makes perfect. And to become a smart trader, you need to practice you need to practice your strategy very, very well. Write down all your mistakes that you've observed, and also the ones that you made, all the mistakes you made yourself. Make sure you take time out to write them out. And also, you remember that you only make money if you repeat what has worked and avoid those things that didn't work. Yes, you make more money. Take away those things that didn't work. Imbibe those things that worked. Stick to them, improve on them, and stick to the rules that you have laid out, such as pricing actions, take profit level, stop loss level, when to enter and when to get out of the trade. Now remember also that before you know it, this will become your habit naturally, and you can implement the strategies you have created in real life scenario. And I tell you, the sky is just the beginning, it's not the limit. My final thoughts: your success at day trading boils down to one key thing: determination. You must be determined enough to come up with a sound, and you must be determined enough to come up with a sound investment or trading strategy, and also plan and maintain that which you already have fixed for all your forex trading that you have put in place. And also, don't allow emotions to take the best of you, or to make you take decisions that are not commonsensical. Instead, focus on the rules that you have laid out, whether it is going against what you have planned or whichever way. Just stick to the plan. Just stick to the plan. Only then can you truly be a successful trader and make more profits in your trading. I believe that this material, this video, has been able to throw more light into some of the rules that you should engage while you want to do your intraday, because intraday comes with a lot of risk. Intraday also comes with a lot of stress. It comes with a lot of attention, and also emotional. It could affect you emotionally if you are not controlled, if you are not matured enough to handle it. Number one, if you also don't have a job, you can go about intraday training like I earlier said, but please make sure you put these rules. Number one, we talked about keeping a journal of your trading rules. Write out your trading rules clearly and follow them. Number two, be mindful of your emotions and your ego. Don't let them get the best of you. And also add a stop loss to all your trades that you put in day trading, because the spiking can be very, very sudden. It can suddenly reverse the opposite direction to your order. Now have a maximum daily loss set, yes, in your mind. You know that, okay, anytime I lose consecutive 3 times, I stop trading. Yes, you stop trading. If the first one stop loss, second one stop loss, third one stop loss, don't bother trading. Just stop what you're doing, close the market, and then walk away. Just go and relax. Number 5, have a risk reward ratio 3:1, which is my advice. 1 for stop loss, 3 for take profit, and also that's risk management method. And also the 3:1 here I'm talking about is also if you have 3 stop loss and then you have 1 take profit, I guess it takes care of all that you have lost, because it's 3:1 risk management and then 3:1 risk reward ratio. Have a simple strategy. Let your system not be encumbered with too much indicators that could even confuse you. How many are you using at a time? Just respect 2 indicators, study those 2 indicators. If you have to buy them, buy them. It's the right investment, the right direction. Forget about these free indicators. They come with limitations. Get the right one, and then you get the best out of that indicator. And also, you do not have to trade every day. I've told you the days to trade. Stick to those days and you make more profit. And also remember that you need to spread your risk. Don't just put everything in one particular currency pair and then you begin to trade that one serially more than 6 times, placing order on one currency pair. Find a niche and stick to it. Find the currency pair that you prefer. Study the currency pair over the time, weekly, daily, and know what is common at different days, what is common at different months, and try and notice it and find a niche and stick to it. Like I've just said, liquidity and volatility. Watch out for those currency pairs like Euro, US dollar that have liquidity and volatility. Number 11, I told you, do not purchase more of a losing stock or losing forex market. Do not. When you see it already losing, wait. If it hits the stop loss, all well and good. If it reverses to take the profit, which in most cases happens, all well and good. Remember also, I told you in number 12, avoid putting focus on your balance and your averages and your leverages and so on. No, you don't need that. Don't act impulsively. All you need to focus on is more trades should be won and less trades should be lost. That's what you should focus on. Try to minimize your losses. Number 14, I told you, conduct a daily review. Did you abide by your rules? Were there any weaknesses that you discovered, and what do you want to do to improve on these weaknesses? And then, was the trading strategy that you have been using that whole month, that whole day, was it really working? Are they really working? Number 15, practice various situations. Write down your mistake. Practice with a demo. Practice with a lot of indicators until you find out the right one. Remember, before you know it, it will come naturally and you become a good trader. Don't forget, determination is everything. Yes, determination is everything. I wish you all the best as you go trading, and I want to invite you, please visit my Facebook page and click like on my Facebook page. My Facebook page is at Forex Training by Henry. You can also visit my YouTube page, which is Forex Training by Henry. Go to my Facebook page, please, and then you'll find all the details that you need to know about my Forex Master Class. For now, it is just 10,000 naira for Nigerians, and for international clients it is $30. And remember, like I said, it's a 3 weeks training, absolutely online Forex training at your convenience. You don't need to go to any classroom. You can, go to work, and when you are back, download the videos, download the materials, or watch them on YouTube, and then begin to learn. I can assure you, in 3 weeks I will give you all that I know, all the secrets that you need to pick. And I tell you, the sky is just the beginning. Finally, I want to admonish you as much as possible to please apply caution when you're trading the Forex. Don't be carried away with greed, and don't be carried away with assumption, and don't be carried away with emotions. Be very, very careful. Remember the rules: discipline and determination. With that, you remain diligent, and then you come out successfully. Thank you very much for listening to this video. I wish you all the best. Thank you. Bye.